Hello, everyone. I am Shannon Ballman Theis, the Payroll Queen, and today we are going to be discussing the Maryland MW507, which is their federal W-4 equivalent. All right. So this one reminds me of the old federal W-4 form before they changed it, where the wi withholding exemption certificate is at the bottom. But we're going to start at the top. So it's the Maryland Form MW507, and the purpose is so that your employer can withhold the correct Maryland income tax from your pay. Consider completing a new form MW507 each year and when your personal or financial situation changes. I always recommend that a new W-4 or W-4 equivalent gets completed even for an address change, because I don't want to have any question as to why did this change take place. And for the employers out there, you'll know that I also always recommend that all these notes get kept in the employee file as to why you changed something. And a lot of the payroll softwares will have the ability to make those notes. Basic instructions. Enter on line 1 below the number of personal exemptions you will claim on your tax return. However, if you wish to claim more exemptions, or if your adjusted gross income will be more than $100,000, if you are filing single or married filing separately, $150,000 if you are filing jointly or as head of household, you must complete the personal exemption worksheet on page 2. Complete the personal exemption worksheet on page 2 to further adjust your Maryland withholding based on itemized deductions and certain other expenses that exceed your standard deduction and are not being claimed on another job or by your spouse. However, you may claim fewer or zero exemptions. So all of those words are to let people know that the goal is that you don't get a refund and you don't pay much in. It's so that you are keeping the correct amount of money in every paycheck. Additional withholding per pay period under agreement with employer. If you are not having enough tax withheld, you may ask your employer to withhold more by entering an additional amount in line 2. All right, so let's just go down here and take a look at line 1 and 2. So the top part is pretty standard. You print your name, social security number, street, city, state, and zip code, county of residence. Non-residents may enter, or non-residents are to enter Maryland County or Baltimore City where you are employed. That really doesn't make sense to me, but I'm sure it's because Maryland needs a county to be entered when you are filing your return. And it should say something up here too about that. All right, so line 1, total number of exemptions you are claiming not to exceed line F on the personal exemption worksheet on page 2. So let's go and take a look at the personal exemption worksheet. Line 1, multiply the number of your personal exemptions by the value of each exemption from the table below. Generally, the value of your exemption will be 3,200. However, if your federal adjusted income is expected to be over $100,000, the value of your exemption may be reduced. Do not claim any personal exemptions you currently claim at another job or any exemptions being claimed by your spouse. To qualify as a dependent, you must be entitled to an exemption for the dependent on your federal income tax return for the corresponding tax year. Note, dependent taxpayers may not claim themselves as an exemption. All right, so now we go to this chart. So if it's $100,000 or less, you're single or married filing separately, your exemption is 3,200. Joint head of household or qualifying widower, your exemption is $3,200. But if you're over 100,000 or but not over 125, you claim 1,600 or 3,200. And if you're above 125,000 but not over 150, if you're single or married filing separately, your exemption drops to 800. However, if you're joint head of household or qualifying widower, your exemption stays at $3,200. And basically, if you make over $150,000 and you're single or married filing separately, your exemption is going to be 200 or is going to be $0. And it steps down if you're joint head of household or qualifying widower until you get to wages in excess of $200,000, then your exemption is going to be $0. In B, you multiply the number of additional exemptions you are claiming for dependents age 65 or older by the value of each exemption in the table below, which is the table we just took a look at. C, enter the estimated amount of your itemized deductions, excluding state and local income taxes that exceed the amount of your standard deduction, alimony payments, allowable child care expenses, qualified retirement contributions, business losses, and employee business expenses for the year. Do not claim any additional amounts you currently claim at another job or any amounts being claimed by your spouse. Note, the standard deduction allowance is 15% of Maryland adjusted gross income with a minimum of $1,850 and a maximum of $2,800. And D, enter $1,000 for additional exemptions for taxpayer and or spouse, age 65 or older and or blind. And then you're going to add A through D. Divide the amount on line E by $3,200, drop in a fraction, and don't round up. This is the maximum number of exemptions you can claim for tax withholding purposes. So let's just say the number is going to be 1.8. On line F, you enter 1. And for some reason, I just noticed that when you put 1.8, it automatically rounds up. But that is not what you want to do because the instructions specify not to round up. All right. So then you would, in this instance, you would enter 1 on line 1. And line 2 is additional withholding pay period under agreement with your employer. So let's say you had to pay in quite a bit last year, and you're single. I would recommend that you take whatever you had to pay in last year. If your situation is going to be about the same, if you divide that by the number of paychecks you get, that would be one way that you can calculate the additional withholding pay per pay period. Because remember, this is per pay period. I have had people who have wanted to have an additional $500 a year withheld that have entered $500 here, and that is not the way that you want to do it because that will be $500 every paycheck. So to avoid confusion, it is per pay period is the amount that you will want to have withheld. And if your tax situation is likely to change during the year, then this to figure out it, if you want to have additional withholding per pay period, I would discuss that with your tax advisor because you want to make sure that you're not going to have a huge overpayment or a huge underpayment when you're filling out this form. All right. Um, Exemption from withholding. You may be entitled to claim an exemption from withholding of Maryland income tax if A, last year you did not owe any Maryland income tax and had a right to a full refund of any tax withheld, and this year you do not expect to owe any Maryland income tax and expect to have the right to a full refund of all income tax withheld. If you are eligible to claim this exemption, complete line 3, and your employer will not withhold Maryland income tax from your wages. Students and seasonal employees whose annual income will be below the minimum filing requirements should claim exemption from withholding. This provides more income throughout the year and avoids the necessity of filing a Maryland income tax return. So, line 3, in order to claim the exemption, you have to certify that last year you didn't owe, and this year you don't expect to owe. And it also specifies that it includes seasonal and student employees whose annual income will be below the minimum filing requirements. If both A and B apply, enter the year applicable. So if you're filling this out for 2026, you'll put 2026, and then you will type exempt here. Or if you're filling it out by hand, you will write it. Certification of non-resident in the state of Maryland. Complete line 4. This line is to be completed by residents of the District of Columbia, Virginia, or West Virginia who are employed in Maryland and who do not maintain a place of abode in Maryland for 134 days or more. Residents of Pennsylvania who are employed in Maryland and who do not maintain a place of abode in Maryland for 183 days or more should complete line 5 to exempt themselves from the state portion of the withholding tax. These employees are still liable for withholding at the rate in effect for the Maryland county in which they are employed, unless they qualify for an exemption on either line 6 or 7. Pennsylvania residents of York and Adams counties may claim an exemption from the local withholding tax by completing line 6. Pennsylvania residents living in other local jurisdictions which do not impose an earnings or income tax on Maryland residents may claim an exemption by completing line 7. Employees qualifying for an exemption under 6 or 7 should also write exempt on line 4. Line 4 is not to be used by residents of other states who are working in Maryland because such persons are liable for Maryland income tax and withholding from their wage is required. If you are domiciled in the District of Columbia, Pennsylvania, or Virginia and maintain a place of abode in Maryland for 183 days or more, you become a statutory resident of Maryland and are required to file a resident return with Maryland reporting your total income. You must apply to your domicile state for any tax credit to which you may be entitled under the reciprocal provisions of the law. If you are domiciled in West Virginia, you are not required to pay Maryland income tax on wages or salary income, regardless of the length of time you may have spent in Maryland. Under the Service Members Civil Relief Act, as amended by the Military Spouse Residency Relief Act, you may be exempt from Maryland income tax on your wages if, one, your spouse is a member of the armed forces present in Maryland in compliance with military orders, or two, you are present in Maryland solely to be with your spouse, and three, you maintain your domicile in another state. If you claim exemptions under the SCRA, enter your state of domicile or legal residence on line 8, enter exempt in the box to the right of line 8, and attach a copy of your spousal military identification card to form MW507. In addition, you must also complete and attach form MW507M. All right, so there's a lot that we went over up on there. So for line 4, if you're going to claim exemption from withholding because you're domiciled in the following state, check the state that applies. And you further certify that you do not maintain a place of abode in Maryland for 183 days or more, then you will type exempt in line 4. Line 5, you're claiming exemption from Maryland state withholding because you're domiciled in the Commonwealth of Pennsylvania and do not maintain a place of abode in Maryland. You write exempt in line 5. 6, I claim exemption from Maryland local because I live in a local Pennsylvania jurisdiction within York or Adams counties. Then you're going to write exempt on line 4. Normally it says it's here, but this one specifically says line 4. And then in 7, you claim exemption from Maryland local taxes because you live in a Pennsylvania jurisdiction that does not impose an earnings or income tax on Maryland residents. You're going to write exempt on line 4. And you, in line 8, this is where you're certifying that you're a legal resident of another state, and you type that state here, and are not subject to Maryland withholding because you meet the requirements set forth in the Service Member Civil Relief Act as amended by the Military Spouses Residency Relief Act. You're going to write exempt here. And remember, if you click this, if you write exempt here, you have to attach your military ID and fill out an MW507M. Duties and responsibilities of the employer. Retain the certificate with your records. You are required to submit a copy of this certificate and accompanying attachments to the Compliance Division, Compliance Program Section, 7 St. Paul Street, Baltimore, Maryland, 21202, when received. If 1, you have any reason to believe the certificate is incorrect. 2, the employee claims more than 10 exemptions. 3, the employee claims an exemption from withholding because they had no tax liability for the preceding tax year and expects to incur no tax liability this year, and the wages are expected to exceed $200 a week. 4, the employee claims an exemption from withholding on the basis of non-residence. Or 5, the employee claims an exemption from withholding under the Military Spouse Residency Relief Act. Upon receipt of any exemption certificate, form MW504, the Compliance Division will make a determination and notify you if a change is required. So you do not send all of the MW507 forms to the compliance division only if they meet those 5 criteria that I just listed off. And once a certificate is revoked by the comptroller, the employer must send any new certificate with the employee to the comptroller for approval before implementing the new certificate. If an employee claims exemptions under 3 above, a new exemption certificate must be filed by February 15th of the following year. Number 3 above is that they claim exemption from withholding because they have no tax liability for the preceding tax year and expects to occur no new tax liability for this year. And it's pretty standard that if you claim exempt from taxes, that you have to submit a new certificate every year by February 15th. And if you do not submit, if a new MW507 is not submitted, it doesn't say here, but typically if a new certificate of exemption is not received, the default is you withhold tax, the employer will withhold taxes at the single with 0 exemptions, which is the highest rate that taxes can be withheld until a new exemption, withholding exemption certificate is completed and turned in. Duties and responsibilities of employee. If on any day during the calendar year, the number of withholding exemptions that the employee is entitled to claim is less than the number of exemptions claimed on the withholding exemption certificate in effect, the employee must file a new withholding exemption certificate to the employer within 10 days after the change occurs. A lot of times this just doesn't happen, but it is definitely in the employee's best interest to not have their income taxes over withheld, because when or under withheld, because when your withholdings are under withheld, you're going to end up owing a lot more money at the end of the year. And when you file your income taxes, and nobody likes to have to pay in a lot. So thank you all for watching this edition of the Maryland MW507. Please let me know if you have any questions about any of the things that I covered today, and I will definitely respond. Usually within 3 days of you leaving the comment, we are responding to all of them. So thank you for watching, and we'll see you guys next time. Bye.